Hi, everybody. Welcome to the February edition of our monthly analyst call. We'll get started right now. So this month we have a special edition of our monthly analyst call. We're going to talk about analyzing liquidity using Data Plus, which is Kaiko's new data visualization platform. So we're going to look at real market trends, but also provide a bit of background on liquidity and what it is, how it's measured, and what kinds of data you can use before we do the demo of the platform. So first, a bit about Kaiko in case you are new here. Kaiko is a crypto data provider. We have been around since 2014, and today we offer 6 main services. The first is our market data. This is really our flagship product suite. It is tick level and aggregated data from more than 100 centralized exchanges. We also offer DeFi and blockchain data from the most liquid protocols and networks. We have analytics such as implied volatility and value at risk. And then finally, rates and indices. These can be used as the foundation for financial products. Fifth is our research, which is what I lead. And the last is visualization. This is our newest product offering, and it is what we are going to spend most of the time talking about today. So first, some Kaiko updates. If you are going to DAS in London in a couple weeks, definitely reach out, hit us up, schedule a meeting, or stop by our booth. We will be there. And we also have, second is a new guide, the data guide for crypto reporting. There's a bunch of new reporting requirements coming up. So you can find that on our website at kaiko.com. So first, what is Data Plus? Before we dive into the underlying data, Kaiko has always been a data provider, but this is our first time building a platform that lets you actually visualize the data. So for the first time, you don't need a license. You can actually just go to this website, dataplus.kaiko.com. It's free, and you can browse more than 25 charts leveraging Kaiko's unique liquidity data. So Data Plus offers coverage today for Bitcoin and ETH, but more coverage planned in the future across 38 cryptocurrency exchanges. We picked the most liquid, so it's the most relevant platforms. And the data that powers it is trade data, order book data, and price data with up to a year of history. So before we get started, the core question I want to answer is, what is liquidity? Liquidity, I think, is one of the most misunderstood concepts in crypto. Many people equate things like market capitalization or trade volume to liquidity. But at Kaiko, we have always been big proponents of using many data types to gain a more complete understanding of a crypto token's liquidity. So first, let's define liquidity. Again, trade volume gives a very incomplete picture. This is because, let's say I am selling $1 billion worth of Bitcoin. This is a massive amount. It would show trade volume very high. You might think the asset's very liquid, but what you don't see is the price completely collapsed. So how we define liquidity is the degree to which an asset can be quickly bought or sold on a marketplace at stable prices. So it's this crucial concept of stability that is very important when you talk about a crypto asset's liquidity. And it's why trade volume gives not a fully complete picture of an asset's liquidity. You need something else. And this something else is order book data. So order book data, it's essentially unexecuted orders, bids, and asks for an asset. And with order book data, you can study the impact of trades on the price of an asset. So at Kaiko and Kaiko Research, almost all of our liquidity analysis incorporates this data type. So there are 4 main metrics that we use to measure liquidity. The first is trade volume. It's still very important. This is just the quantity of an asset that is bought or sold over a time interval. The higher the value for trade volume, typically the more liquid the asset. The second most important that we use, though, is market depth. This is using order book data. Market depth simply refers to the quantity of bids or asks on either side of the mid price for a trading pair. So when you have a deeper measure for market depth, this typically means that the asset is more liquid. The third measure we often use is the spread. This is again derived from order book data. This is the difference between the best bid and the best ask on an order book. When you have wider spreads, this typically means an asset is less liquid. So you really want narrow spreads. And then finally, the fourth is a bit more complex. This is price slippage. This is a metric that traders typically use, and it's to measure the impact of the expected price of a trade on the final execution price. So this is again using order book data. So what does Data Plus include? It includes trade volume and market depth data. We do have all of these data types, but for now, we're just going to focus on these two. So just a bit further on market depth, in case you are unfamiliar with an order book. So here on the right, we have an example of the order book for the ETH-Euro trading pair. You will almost always see a visualization of a real-time order book as a type of V shape. You have the bids on the left and the asks on the right. And underneath, you actually have the list, the itemized list of all bids, buys, and asks, sells. And so in this example, the market depth would be like the quantity of these bids and asks on either side of the mid price. And so you can say that you would have, let's say, bids on the ETH-Euro trading pair. You have 60 ETH on the bid side within 10% of this current price. And so in other words, another way to think about market depth is it would take a sell order of 60 ETH to push down the price 10%, if we're talking about 10% depth. So typically a healthy order book is V-shaped. You want there to be a lot of bids and asks because that means it's harder to push up and down the price of the asset, which means it's less volatile. So let's now take a quick look at the Data Plus interface before we talk about the actual data that is used. So we have this nice, pretty dashboard. We're going to explore it in a bit. The first thing you can do is select your asset. Right now it's Bitcoin and ETH, but in the future, we will expand this to more crypto assets. Next, you can look at these categories. So here you will see different categories of charts. And each one, the number refers to the number of charts included. You have centralized exchange volume, decentralized exchange volume. You have a comparison of the two. You have liquidity, which uses market depth data. And then finally, you have price, which uses price, volatility, and returns. You can also browse each individual chart just by searching for the metrics here. And finally, I think the coolest feature that we have for Data Plus is that you can toggle between granular and aggregated. So granular gives you a high-level view of the data, whereas aggregated lets you actually dive deep into the individual exchanges that are used. So we're almost at the full demo of Data Plus, but before, let us first talk a bit about the data. So I've worked in crypto data for almost 6 years at this point, but not everyone has done so. So when you're talking about data, there are many different levels of aggregation. Let's start at the left. You have the most granular data. This is what's called instrument level data. Essentially, you are collecting trade or order book data from the trading pair, which is essentially the same. It's just a synonym for instrument. So at the instrument level, this data is very granular. It's essentially every tick level trade for like the ETH dollar pair on Coinbase or the ETH BTC pair on Bitfinex. Next up in the aggregation level, we have exchange level data. At this point, we can now take an aggregated sum of, let's say, all ETH trading pairs on Coinbase. For example, on most exchanges, you will have multiple trading pairs for an asset. On Coinbase, you might have 15 trading pairs that incorporate ETH, while on Binance, you might have 35 trading pairs that incorporate ETH. So if I want to know which is the most liquid exchange for ETH, then I would want to know maybe at the exchange level, how much total volume is there on Binance. So that's exchange level data. And then of course, the last step is asset level data. This is trade or order book data for all instruments on all exchanges. So here's an example of what this looks like. Asset level market data. This is all instruments, all exchanges. You have some example values for the instrument level data for ETH. For example, ETH dollar, ETH tether, ETH BTC. Each one has a different value. That's 200 plus ETH instruments that we have in our coverage. If you sum this all up, you get the exchange level data from many, many exchanges, dozens. And then finally, you get the asset level. So asset level data, I guess the point in showing this is that it requires many millions of data points. It's a very powerful metric to have asset level data because in order to get it, it's a huge effort. You have to collect data from hundreds, if not thousands of traded instruments and then aggregate it all while also normalizing. And so here you can see that we normalize with a dollar value. So Kaiko's Data Plus incorporates exchange level and asset level data aggregation. Hopefully one day we'll be able to add instrument level, but for now we're sticking to exchange level and asset level. The data we have though, we do have instrument level if you're interested. Okay, so let's now dive into Data Plus. I am going to give an example analysis of how to analyze Bitcoin liquidity using all of the charts we have. So you can see that we've already selected Bitcoin. And now I'm just going to take a closer look into Bitcoin trade volume. This is the first chart we have out of 7 in this category. So let's say I want to look at a year's worth of data. I'm just quickly going to toggle this here. And let's now analyze this trend. We can see that Bitcoin trade volume started the year off pretty strong. In fact, in March, it hit, I think, multi-year highs, at least highest level since the FTX collapse. And this is mostly because this was the March banking crisis. You remember, this was almost a year ago when all those banks collapsed. Well, it caused a huge amount of overflow into crypto markets, and you saw volumes for Bitcoin touch almost $30 billion in just one day. Now, we haven't yet hit that high, which is probably a good thing because this is a big sell-off. What we did see, though, is over most of the year, volumes were pretty flat. We barely saw anything over the summer, but that all started to change in the run-up to the ETFs. Here we see a nice steady increase in aggregated trade volume. And now we're finally averaging a bit around 9 to 10 billion on average every day, which thankfully is a lot higher than earlier in the year. So now let's take a look at the granular data. This is one of the coolest features of Data Plus. Kaiko has one of a very comprehensive coverage of exchanges, so you can scroll and really pick the exchanges that you care about. So let's say I'm a trader. I care mostly about Binance and Coinbase. I want to know what is the aggregated Bitcoin trade volume on Binance. Well, I can easily just pick the exchanges I want. I want to look at Coinbase. Let's say I also trade on Cboe Digital, a more institutional exchange, and I can really mix and match which exchanges I want to analyze. Can also find some interesting trends. For example, Binance US in the United States had huge volumes, almost $600 million worth of Bitcoin trade volume every day until it got hit with a lot of regulatory measures, and now volume has pretty much collapsed on Binance US. So that's a cool feature of this chart. Let's now scroll down and start exploring a bit more. So again, I want to look at the year. And here we're looking at trade count. This refers to just the quantity of trades executed over a time interval. So it's probably not as relevant as trade volume. And it's actually most interesting when you look at this from the perspective of decentralized exchanges. That's where trade count becomes a very interesting metric. So we'll get more onto that in a bit. But something unique that Data Plus offers is average trade size. You don't see this very much because in order to have average trade size data, you need to compute this using the tick level trades. So essentially what this is the total trade volume divided by the total trade count. Then you get the average trade size. Here we aggregate this across all exchanges, and you can see a very interesting trend. The average trade size has increased a lot ever since the Bitcoin ETFs were approved. From December through February, you saw a big increase in average trade size from about $500 to $600 to about $1,300. So that's a pretty significant increase. Let's figure out, though, which exchanges this trend happened on. So I'm now going to switch the toggle to granular. And here you see something interesting. There's a couple exchanges which have really big, abnormally big average trade sizes. I can tell you what these are. It is LMAX Digital and OSL. These two exchanges are more institutional, so it makes sense that they have, on average, higher average trade sizes. So for now, I'm going to deselect all exchanges because I really just want to focus on, let's say, Binance. And we can see that over the past year, average trade size has stayed pretty standard. It's increased a little bit over the past couple months, but not much in comparison to Coinbase. So here I'm going to bring back that comparison, and we can see something interesting. Coinbase has had a pretty big increase in average trade size. It's very significant and ultimately a lot bigger than Binance. So some insights I can draw from that is that Coinbase on average is probably a bit more institutional right now than Binance. And it seems like the ETFs had a big impact on trading activity on Binance for Bitcoin in particular. And yes, we'll be able to answer some questions after the demo. So the next metric we're going to look at is what is US versus global market share of volume. Here, the metric is in percentage. Essentially what we did is we figured out all of the exchanges in our coverage where Americans can trade on. So even if an exchange is based in Europe, if they allow US traders, then we classify that as a US available exchange. Whereas global exchanges, it's simple. If you're American, you can't trade on it. So this gives a good idea of where crypto activity is centered. And you can see that there was a big drop off in global exchange volume at the start of this year. I can tell you, though, that this is entirely due to Binance. Binance had a zero-fee trading program that they ended in March, which caused an instant drop in Bitcoin trade volume. So that's sort of explaining the trend that we see here. And at which point, after the fact, we don't really see much. We do see actually a slight increase in the global market share of trade volume, despite the fact that the ETFs were launched in the US. So this is a bit interesting as a trend. So the next chart we're going to look at is market share of trade volume. This just takes the ratio essentially of Bitcoin volume across all exchanges that we have covered in Data Plus. And it's more useful as a tool. You can play around with exchanges that you trade on or exchanges you're interested in, and you can really understand the trends over time. So let's again look at Binance versus Coinbase. Here, I'm going to compare their trade volume. We can see that a year ago, Coinbase accounted for just 3.3% of trade volume relative to Binance for Bitcoin. But today, that number is a lot different. Today, actually yesterday on February 26th, it was more than 14%. So this just shows Coinbase has definitely gained a bit of market share relative to Binance over the past year. One interesting trend, though, I discovered this week is Binance relative to Bybit Spot. So Bybit Spot is another global exchange that has seen a big increase in trade volume over the past year. In fact, at the start of the year, it had less than 2% of volume relative to Binance. And today it has between 16 and 18%. So does this mean that Bybit Spot is going to be a big competitor to Binance? It seems like they are catching up and getting closer and closer. So if we scroll down a bit, the next we have just some predefined groupings of exchanges. Here again, we are looking this time only at US exchanges. So it's easier to understand essentially where the American traders are going. The big yellow here is Binance US. This makes sense. At the start of the year, Binance US had about 30% of US market share, but after all of the regulatory actions, this has dropped to a very small percent, like 1% or something, even less on some days. So this just shows Binance US has failed to come back after all of its regulatory problems, whereas Coinbase is again still going strong. But we notice something interesting here. We see the more institutional Cboe Digital has gained quite a bit of Bitcoin market share, which is a sign that there are probably a growing number of institutional traders in the US right now with the ETFs. And yeah, this one again is global exchange market share of volume. So I think now we can move on to the DEX charts. So the thing about DEXs is you don't trade Bitcoin on DEXs, you trade ETH or a wrapped version of ETH. So in this case on Data Plus, ETH equals wrapped ETH. And so here we're going to be looking at wrapped ETH trade volume on decentralized exchanges. Wrapped ETH is one of the most traded assets in DeFi, and it's sort of the counter asset to many altcoins that trade on decentralized exchanges. So it's very interesting to see where most of this volume happens. And so it's no surprise. It's Uniswap v3. Uniswap v3 is by far the biggest decentralized exchange. It has huge volumes relative to most other. So we can also here now we'll scroll down to trade count. This is where things get interesting when you're comparing decentralized exchanges. On centralized exchanges, they typically have many millions of trades every day. They get a lot of traffic, a lot of volume from retail traders, whereas on DEXs, it's a lot more niche. And what's interesting is that every single day, on average, there is only about 70 to 80,000 trades for ETH across all of these major decentralized exchanges. Whereas on centralized exchanges, you get many, many millions. So this just shows that there's still a long way to go for DEXs to actually gain a lot of users. Average trade size is where you see this trend really play out. The average trade size on decentralized exchanges is between $10,000 to $15,000, whereas on centralized exchanges, it's only about 1,000. So does this mean that only whales are trading on DEXs? I think the data sure seems like it. It seems like it's probably more profitable for a large trader to be using these platforms as opposed to a small one. And that's even more pronounced when you actually break it down by exchange. You can see that at one point, this was a couple days ago, the average trade size for wrapped ETH on Curve was $474,000. This means that there were probably only a handful of trades on this day, but the vast majority were extremely high volume. And so then finally, you see market share of volume, and this lets you see the big trend that Uniswap v3 today commands about 80%, 81% of global volume for this crypto asset. So moving on, this one will be quick, but this is a comparison. This lets you compare centralized and decentralized exchanges. It takes the aggregated measure for both trade count and trade volume, and it lets you really see the difference. It's quite extreme for ETH. On any given day, there's only a couple 50 to 60,000 trades for ETH on decentralized exchanges compared to several million trades on centralized exchanges. And if you look at the dollar value of that in trade volume, you notice a similar trend. It's slightly bigger because of the average trade size on DEXs, but overall, there's a lot more volume on centralized exchanges. And here you can actually compare the market share of volume. If you are trading on both centralized and decentralized exchanges, this is useful. So now to my favorite data type, which is the market depth liquidity data. I'm going to switch back to Bitcoin here just so we can see. So the measure that we chose here is 2% market depth. Essentially what this does is it takes the sum of bids and asks within 2% of the price on all Bitcoin order books, and it aggregates this. So today or yesterday, there was the equivalent of $517 million worth of bids and asks on all Bitcoin order books that we're covering. That's a huge amount. That's almost $500 million worth of liquidity. So if we look at that measure over time, we can actually see that liquidity has increased a lot for Bitcoin over the past year, which is a good news. This means that markets are probably rebounding. And if I want to actually dive into the specific exchanges, I can see here which exchange is most liquid. This is very useful if you're a trader and you want to understand where should I trade this crypto asset. Well, let me just compare liquidity on all of these exchanges. And let's say I want to know what Binance liquidity is, average market depth versus Coinbase. That's also quite easy to do with this platform. One useful thing about market depth is this chart here denominates market depth in dollars, but we find that this sometimes, especially as prices increase, there's a risk of price effects. And so to avoid that risk, we also have a chart showing the market depth, but this time denominated in the native units, so the asset. So here we are looking at Bitcoin market depth in terms of number of Bitcoin. So here we see a much more interesting story. We can see that market depth has actually fallen a lot for Bitcoin. It started the year at about 15,000 BTC on these order books, whereas today it's just about a little under 10,000 BTC on these order books. So most market makers, they'll probably denominate their positions in dollars. So this isn't that surprising, meaning that as prices increase, they don't need as much capital on exchanges, but nonetheless, it's very interesting to see the trend play out in this chart. Another very cool metric that we have is the ask versus bid depth. So here you can actually see the global aggregated amount of asks and bids for a crypto asset. I think Kaiko might be the only data provider to be able to provide such a high level metric, which can be useful if you're trying to look at long-term trends for an asset. For example, here I noticed that the number of asks far outweighs the number of bids right now on Bitcoin order books. So what this might suggest to me is that there is going to be resistance towards the upside for Bitcoin, in that the buying is going to get exhausted because it's hitting this sell wall. Whereas last week, we did not see that. We saw sort of a reversal of this trend. And again, you can see that again, that this was the dollar value of bids versus asks, whereas this is the asset value of bids versus asks. We have a very similar chart for market depth as what we had for trade volume. You can also see the market share of 2% market depth. That's a bit of a mouthful, but we can see here that US liquidity has actually increased a lot ever since the ETFs launched. And I can say that this is actually Coinbase where we saw this increase. I'll go up to show you. You can see here that Coinbase has seen a big increase in Bitcoin liquidity over the past few months. And the last chart we have is the market share of 2% depth. Let's say I, again, want to compare Coinbase to Binance. I can see here, let's look at the year, that overall Coinbase is gaining a lot in liquidity, even though its volume is still a lot lower than Binance. So this shows that Coinbase order books are probably a lot more liquid than Binance right now, relatively speaking. Okay, that's our liquidity section. We just have a couple more charts to review, and then we can dive into your questions. So first, this is basic. Here we're looking at price. Great price chart here. Bitcoin right now is approaching all-time highs. We also have realized 30-day volatility. This is rolling, just showing that, Bitcoin volatility is not what it was. And it's actually, it was quite flat over the past couple of weeks. It's probably changed though, but this is a rolling measure, so we won't see it for a bit. We have rolling 365-day returns. And then finally, we have rolling 30-day returns. So that is all for Data Plus right now. Here's sort of how you would pick a chart. If you want to, you can also expand it and just get a higher viewing resolution. And then what's cool is you can also click this little camera image right here, and you can now have a nice download right here that will let you embed this into your own research. So the goal of Data Plus really is to empower researchers with a tool for them to embed their own charts and analysis. So now I will open the floor for questions. Thank you very much. Okay, we have one question. Does the Data Plus product cannibalize Kaiko's integration with other data viz providers? I would say no, because we don't offer this data to other providers. Another one, how did you decide to build Data Plus? Was it requested by customers or was it adjacent? This was, I think, designed to accompany Kaiko Research and serve as a way to better understand Kaiko data. We have one from Dorian. What quote currencies are included? So we do all quote currencies. So when we have an exchange, we take all traded assets against all currencies that trade on that exchange. And then we do a US dollar conversion. And so that's how we do it. And it's the conversion that makes it a lot easier for us to display. Okay, any other questions? I'll share the link so you guys can see it. And you can also view this on our website at kaiko.com. But thank you all for joining this unique edition of our February analyst call. Oh, one more question. Okay, so assuming all information here is spot, will you capture derivatives data in the future? So yes, again, essentially we're looking for feedback. If you have any requests, feel free to let us know about what you're interested in, and we can consider adding that as a chart. We have two more questions. Has liquidity recovered to pre-crypto winter levels? It hasn't fully recovered, but it's almost there. The dollar value is increasing a lot. The asset value has fallen a lot, but again, it sort of depends on your perspective. Do you care about market depth from the perspective of dollars, like the dollar value of the bids and asks, or the native units on the order book? Second is, how do the Bitcoin ETFs affect liquidity? So I think overall positively, and we saw that on Coinbase. Coinbase plays a big role in the Bitcoin ETFs, and they have seen a big increase in liquidity. Also because all of these ETF issuers, they need a way to like buy and sell Bitcoin, so they need deeper liquidity. Okay, could you repeat, next question from Michael, could you repeat your analysis of Coinbase versus Binance? Binance has more liquidity, but Coinbase has deeper order book. So in terms of liquidity, Binance has higher trade volume than Coinbase, but Coinbase has a deeper order book. And if you look at that on the chart, you can see Here's aggregated versus granular. I'm just going to expand this really quickly. And you can see Binance versus Coinbase. You can see, yeah, Binance has way higher volumes than Coinbase. But if we go to liquidity, and then we go to Binance versus Coinbase, we can see that Coinbase has deeper order books than Binance. So to access Pro, a good question about what Pro is. So Pro has not launched yet. We're currently taking feedback. And so right now we don't have, this is free, Data Plus is free. Anyone can use it. The Pro version will likely be gated, but we're still developing the product. Okay, if no more questions, then thank you very much. Feel free to visit and drop us some feedback.